Hello, everybody, and welcome to another episode of Frugal Noodle, the podcast dedicated to helping you understand money, retirement, early or otherwise, finance in general, and in today's case, crypto, part 2. As a disclaimer, I am not a financial advisor, and this is not financial advice. I'm simply sharing information as I come across it. Now, on last week's episode, we covered debt, or really what is considered good debt. And if you listen to that episode, you know that I don't think that there is necessarily such thing as a good debt. I think there are better debts than bad debts. But should we call something like debt in any capacity good? Well, go listen to that episode if you haven't. But the week before, we did our first part of this 3-part series covering crypto. And the first episode covered mainly a lot of terminology and some history on crypto. This week's episode, we're going to be getting into more of crypto in today's world. And then we'll talk a little bit about my time in crypto so far. But of course, the first thing I have to do is cover a little more terminology. And this time I only have 4 things I want to cover because I think they help where this episode is going. So the first thing I want to define is volume. And volume most often is pertaining to a 24-hour period of time and reflective of the number of coins being exchanged and their value. On the day of this recording, Bitcoin has a volume of over 2 million coins, which were valued at over $76,800,000. Now, next, I want to talk about circulating supply, which is the amount of trading activity for a given currency, or how much of a coin is in circulation, passing throughout the market and between the hands in the public. Now, again, because Bitcoin is the easiest reference, at the time of this recording, Bitcoin is 18,715,000. Now, market cap in crypto is the total market value of a cryptocurrency's circulating supply. So this is determined by taking the circulating supply of that currency and multiplying it by that currency's current value. And at the time of this recording, Bitcoin's was $714,520,000,000. And the last term I want to define is tokenomics. And what tokenomics is essentially the way that a coin is broken down to understand it more simply. Tokenomics will tell you if a coin is proof of work or proof of stake, the market cap of that coin, how many coins will ever be minted of that coin, and if there's a burn rate, what that burn rate is. It defines basically how the coin works before you, as a investor, are willing to invest in it, which is something I always recommend anyone getting into crypto begin to understand, tokenomics. And there are things within tokenomics that we will define, but in episode 3. So where does crypto bring us today? Well, it's obviously entered the mainstream again. Crypto, namely Bitcoin, has been in the mouths of mainstream media outlets as early as 2011, when it hit $1 per coin. If you know what Bitcoin is nowadays, $1 per coin is insane. But this year, in 2020, has been huge for Bitcoin and crypto in general. Some major milestones. Bitcoin at its lowest was $5,000-ish, and its all-time high was established on April 11th, 2021, which was $64,805 per Bitcoin. It went from $5,000 at its lowest to $64,000 at its all-time high. That is crazy. There has been a large amount of adoption of Bitcoin, leading to its highest price point, predominantly by Square's Jack Dorsey and Tesla's Elon Musk. Maybe not predominantly them, but those are names we're most familiar with. But there have also been pro football players asking to be paid their salary in Bitcoin. And even Miami's mayor, Francis Suarez, has deemed Miami the crypto capital of the world. Conversely, there has been a large cutting of ties to Bitcoin, pushing its price back down to the sub $40,000 levels that we're seeing today, at least at the time of this recording. And this is due to its environmental costs, namely, and yes, I'm serious, Tesla's Elon Musk. who went from accepting the currency for purchasing Teslas in the end of March 2021 to no longer accepting the currency to purchase Teslas at the beginning of May 2021. That's less than 2 months from full adoption to almost ridiculing the currency. And we talked about this in the last episode, the part 1 of the series, about the environmental impact that proof of work currencies like Bitcoin has. And yes, there is merit in that decision to cut ties to something with an environmental impact, especially as an electrical vehicle startup like Tesla. But it's also important to note that Bitcoin is already showing some bounce back at this time, at least at the time of my research, despite all of this backlash. But in all reality, the value could drop to zero tomorrow, as with any cryptocurrency or any stock. During this crypto bull run that we find ourselves in, Bitcoin has not been the only coin to achieve major all-time highs. In fact, you'd be hard-pressed to find a coin in the past year and a half that hasn't set a new all-time high. Ethereum broke $4,000 per coin. BNB, the Binance Exchange's own currency, nearly hit $700. Litecoin just barely broke $400. And of course, the gateway coin to crypto, Dogecoin, which has been the shocker in the crypto world that has defied even its own tokenomics and gone from being worth less than a penny to being worth over 70 cents during its all-time high. 70 cents doesn't sound like much, but to go from 0.002 cents to 70 cents is almost a 350x, or a 35,000% increase. Many other well-established coins have set their own all-time high in this time, and so many new coins with the right influence have seen unbelievable gains ranging anywhere from 2x to 10,000x or more. And 10,000x, that's 1,000,000% increase. There's so many factors to how coins succeed or fail, and we'll cover that all very soon, mostly in part 3. Now, the top currencies today, you can go on websites like CoinMarketCap, CoinGecko, CoinDesk, and they will have a ranking top 10, 20, 100 currencies, and you can muddle through all of that to understand which currencies are the top today in terms of performance. What determines their top rankings is because of their volume, circulating supply, and their market cap. Typically, you can sort by different filters to understand which currency is ranking for which reasons. You can sometimes sort and find a currency that has a very low market cap at that time, but it's the highest searched currency because people are gaining interest in it. A very good example of that would be one that's on the rise right now, SafeMoon. If you're interested in crypto, you'd be pretty hard pressed not to have heard of SafeMoon. It's one that I'm invested in. I'm a pretty early adopter into it, actually. And while it's not outdoing the top 10 currencies in terms of market cap, it is and has outdone other currencies in volume and circulating supply. But for the most part, the mainstay tokens that remain at the top are going to be your Bitcoins, your Ethereum, BNB, Litecoin, similar tokens to those, because they're so well rooted in this world of crypto and they're very hard to dethrone. Now, my introduction to crypto dates back to probably, well, I've heard of crypto back when Bitcoin came to the mainstream back in around 2011. I'd heard of the currency, didn't think anything of it, just thought it was just a weird Silicon Valley tech thing that I could never get involved with. So like most people at that time, I kind of shrugged it off. And in 2016-ish, when it started to make its rise, I bought a little through Robinhood, which I'll explain to you why you don't want to buy crypto through Robinhood in a minute. But I bought a little through Robinhood and I saw my money go down within a couple hours and I sold it. And then I tried it a couple more times between that time and 2019-ish before I really started to understand and take it a little more serious. But stocks and crypto in general was really lost on me, understanding that you're going to lose money if you stare at it and you're going to get cold feet and sell at a loss. I started to understand all of that. And I came back to crypto actually during Dogecoin's initial run at the beginning of 2021. And while I was messing around with Dogecoin, which unfortunately I sold off before its recent all-time high, because a lot of discouraging things I heard about its tokenomics, I sold it for a gain, but not much compared to what I would have had, but coulda, woulda, shoulda. But during my time with Dogecoin, I got invested in Bitcoin. I got invested in Cardano, which is ADA, and I got invested in Ethereum, BNB. And then that led me into where we are today, which is the kind of deeper cuts of crypto where you only get involved in exchanges that you can't put US dollars into or fiat money into through a credit card. You have to buy and then convert currencies. And that's obviously something you wouldn't be familiar with if you're not familiar with crypto in general. But a lot of the people you see promoting different coins on their TikToks or YouTube channels or whatever, they're often referring to those coins that you can't find on the larger exchanges. So in the instance of like your Safe Moons and Doge coin or Feta, those three that I'm more involved in, you have to buy either BNB off of Binance and send it to your Trust wallet, or you have to buy Ethereum and send that over to a MetaMask wallet, which I will explain this all more in the part 3 of this series. But you send it over to those wallets and then you go on to an exchange like PancakeSwap or onto Uniswap, and that's where you would swap for SafeMoon or Doge. So that's kind of where I'm at today. But the reason I got into crypto more and more is because of the potential I saw in the popular currencies to become adopted by a larger population than they already were. And I guess this brings me to the point that disrupting the norm that we're familiar with shouldn't always be dismissed or suppressed, especially where the disruption is a means for progress. I recognize that decentralized currencies like what we find in crypto are a means for the power to be in the people's hands, like you and myself, unlike what we see with the US dollar and the Federal Reserve, where it's controlled by a governing entity. But even more importantly for my own goals, I saw the potential of tossing some of my investment money at crypto to bring mine and my wife's retirement goal closer than with traditional investing alone. Now, this is where we get into the caveat that I'm not saying that you should rely on crypto for your retirement in any way. Again, this is not financial advice. But for me personally, I see the opportunity to make more major gains in crypto, which can pull that FIRE number into our reach faster. In fact, pertaining to the FIRE movement, most people living this lifestyle would say that playing with individual stocks in crypto is a fool's errand and not the path to FIRE. It requires you to work harder to understand what you're investing into, as well as understand the cues for what will make a successful investment and will likely lead to you losing money. These points are valid. If your goal is to retire early, do not jump into crypto, especially its darker corners, without expecting to put in a lot of time and energy to research projects and their potential to succeed. I'm investing in crypto because I'm willing to put in the effort and due diligence for the projects I'm interested in. You have to be willing to do the same. The reason I got deeper into crypto than I thought I would was mainly due to being involved with the right communities at the right times. I've invested less than $1,000 into the less mainstream coins like Feta, SafeMoon, and Doge, like I've mentioned. But from the profit of those coins, I diversify into a wider range of currencies. And so I really haven't diverted much of my investment money into crypto. I've only dabbled in diversifying through my gains. Beyond the $1,000, my investments in crypto have been in the coins anchored at the top like Bitcoin, BNB, and Ethereum. The FIRE movement aside, there are plenty of crypto purists that say Bitcoin is the only way forward, or Ethereum, or whichever coin they're married to. I diversify my crypto just like I do my index funds and ETFs. Eggs in baskets, folks. That's what it's all about. Speaking of index funds and ETFs, if you're not comfortable jumping straight into the world of wallets and tokenomics, there are index funds and ETFs dedicated to crypto that allow you to enter the space without getting all that complicated. And I'm invested in some of those as well. One of my favorite ETFs involving crypto is ARK Invest's own next generation internet ETF. That symbol being ARKW, which involves some big names like Tesla and Twitter, but also brings in Grayscale, Bitcoin Trust, and Coinbase. ETFs and index funds are a great way to diversify among the stock market, but also get a portion of your feet wet in crypto, which is nice for new investors. All this said, I don't want to intimidate new investors from getting involved in the crypto world, but there's a weight you have to be prepared to carry if you choose to do so. And any money that you put into any investment that you aren't 100% sure will remain stable and not just drop the floor out beneath you should be money that you are prepared to lose. And I mean money that you would just as confidently light on fire. Crypto, stocks, and investing in general is very emotional, even for the most weathered investor. So prepare for hurt feelings. But you have to be resilient and brush your shoulders off to stay in the game. And if you aren't scared off by any of this, then you've made it this far, which is as far as I did when I first got involved in this world. And you should return for part 3 of the crypto series, where I will be covering how you can get into crypto. I'll also talk about the darker crevices of the crypto world, how to spelunk to those depths, and I'll share some tips on how to protect yourself and your money as best as you can if you choose to go that deep. Next week, though, we will do another episode off topic from crypto as I prepare for part 3. We'll be talking about lifestyle inflation, what it is, and how to avoid falling into it. But thank you for listening to this episode. If you've stuck around this long, then obviously you're still pretty interested. And if you do get involved with this very new world that we are merging with our own, then I wish you the very best of luck and that you find success. Be sure to follow the show wherever you get podcasts so you can keep up to date on the latest episodes. And in the show notes below is a link to where you can find Frugal Noodle on social media. The music for this episode was produced by CARBS. This is Cody, and I will see you next week.